card out, slide a new one in, and get on with our jobs. So that's the first hurdle. The second hurdle is NVIDIA's name brand. In my note that I wrote earlier today, this really, to me, feels like the dot-com era, where any kind of good idea would get funded as a dot-com if they had two things. If they specified Oracle with their database and Sun Microsystems was the servers that they were going to run on it. Because that tech stack looked like we knew what we were doing. And in today's funding world, I am sure nobody's out there saying, hey, we're going to give a whirl with these AMD chips. They're probably as good and cheaper. And, that's good. I'm sure every new AI idea is specifying the NVIDIA as part of its tech stack. So these are the things that AMD has to overcome. But I think they can because of their product knowledge, and they have financial latitude to, last as long as it takes to kind of chip away at that market. So
I think I'm in.
Said
the quantum encryption is
all
bypassed.
AMD for video.
Are you sure? The core matrix looks unstable.
I think I'm in.
Okay.
The quantum
And AMD has the potential for tomorrow.
We're in.
Shooting into tech domain.
System access granted.
Expert interviews at
Mainframe unlocked.
DownFinance.com.
We're in.
Are you ready to master the markets and dare I say become a better
Did you
investor in the
bypass the
process?
primary firewall?
Yes, rerouting through the shadow network now. Keep them distracted.
Whether you're a seasoned
Almost
investor
there.
thinking of trends
Did you
or
bypass the
just
primary
starting your
firewall?
financial journey,
Yes, rerouting through the shadow
valuable
network now.
market
Keep
insights
them
and
distracted.
strategies from some of the most influential minds
Almost
on
there.
Wall Street and the
Did you bypass the primary firewall?
Yes, rerouting through the shadow network now. Keep them distracted.
Your portfolio.
Almost
Your
there.
wealth, be you successful investor. Welcome to the Opening Biz Unfiltered podcast. Welcome to Stocks and Translation. Welcome to Financial Briefing. Welcome to Coding Time. Welcome to Everything Not So Bad. The Trader Talk. Welcome to the big idea. Yahoo Finance. From Wall Street to Main Street to the C-suite, we're your daily lifeline. Because behind every great investor is Yahoo Finance. Join us on YahooFinance.com, Yahoo Finance app, favorite streaming platform, and wherever you get your podcasts.
Fancy Page presents Step Inspired Creative. Fancy Page, this rich news as for the inside in a bold light and turns the everyday into extraordinary. Fancy Page steps, love into the details. For specific types of moderate to severe asthma. The symptoms improve and it's days. It's not % breathing problem. Percent has attack. Severe allergic reactions and reactions can occur in brain, face, mouth, other throat swelling, and easy control. And the doctor recommends blood vessels like that. Be shortness of breath, round about for urine, and even without blessings. Your doctors can work with you symptoms, stable days of pain, or a parasitic infection. You can change your stuff on the street and get out of talking to your doctor. You can get more out of your lungs. You can do more with my asthma. And isn't that better? Your doctor will have to fix that. Which is why I love to get asthma. Also, doesn't add up every couple of doses of PhD that is not well controlled. It's a specific part of inflammation. Thanks for calling Consumer Audio. Right number one in network coverage and customer satisfaction. They have two guys that did way better coverage than I do. I'm like, well, it's not a goal, like, it's way more a little. But you coverage. Yeah, I'm sure that
Welcome to Trading Talk. We dish out the latest Wall Street buzz to keep your portfolio sizzling. I'm Kenny Bulgari coming to you live from the Yahoo Finance headquarters in the heart of New York City. A global hub where deals are made, fortunes are built, and the next market move is always just around the corner. Coming up, I'm going to share my big take on reading an earnings report. I'm going to sit down with my very dear friend Adam Johnson, and then I'm going to share my risotto siciliano recipe with you. So let's jump into the big takes. Most people see an earnings report and immediately
Did you
look
bypass
for
the
one
primary
thing.
firewall?
Is the company
Yes,
paid
rerouting through
or
the shadow
missed
network now.
expectations?
Keep them
That's
distracted.
not how pros read the tape. Earnings
Almost
reports are
there.
more than just a
Did you bypass the
They're
primary
playbook.
firewall?
Yes,
That.
rerouting through the
If you
shadow
only
network
focus on
now.
the headline
Keep them
numbers,
distracted.
missing the real signals. that
Almost
could
there.
move Stocks. Here's
Did
what
you
matters.
bypass the primary
Check the
firewall?
top
Yes,
bottom lines. Revenue growth. Profit margins hold up. Earnings per share higher or lower than expected. But don't stop there. Dig into the guidance. What is management saying about the next quarter, next year, and the health of their business? Are they increasing their outlook, holding steady, or warning about tough times ahead? The market cares far more about the future than it did about the past. Now, look for trends and red flags. Are costs creeping up? Is cash flow shrinking while profits look stable? Did the company beat estimates by slashing expenses instead of driving real growth? What's happening with debt, inventories, and customer demand? Read the management commentary and question and answer for hints of confidence or concern. The tone often says more than the numbers. Most importantly, pay attention to how the stock reacts. Sometimes a beat sells off and a miss rallies. That tells you the expectation highs were too low or already baked into the price. The smartest investors know the market is always forward-looking and full of surprises. The bottom line, learning to read an earnings report is about connecting the dots, not just checking the box. Get beyond the headline. Listen for what management isn't saying. Watch the price action. That's how you turn information into an edge. Now, once again, it is my great pleasure to welcome my dear friend Adam Johnson back to the show. Adam was my first guest, and he's a portfolio manager for the American Ingenuity portfolio at Bullseye Investment Group, and the founder and author of Bullseye Brief, a weekly growth-focused investment letter spotlighting what he called American Ingenuity in publicly traded U.S. companies. He's also regularly appears on Fox Business as a featured contributor. Before founding Bullseye, Adam spent 5 years anchoring daily business programs on Bloomberg Television, interviewing CEOs, heads of state, Nobel laureates, and prominent investors. Before his broadcasting career, he built a 3-decade Wall Street resume trading stocks, options, and oil at ING Asset Management, Louis Dreyfus, and Merrill Lynch, where he began his career. A Princeton University graduate with a degree in economics, Adam has consistently brought a passion for American innovation. It is always a pleasure to have him on my show. Please join me, ladies and gentlemen, in welcoming my dear friend Adam Johnson. Adam, it is such a pleasure. Yes, we are. But I'm going to tell you, congratulations. You just recently got back, and I think that's great. Very nice to see it. It's been a long time coming, but it's like you seem very happy, and the pictures of some were just stuck very. Okay, so listen, a lot's been happening, right? In the market, you can talk broadly about a bunch of things. In fact, we can talk about tariffs, which were front and center, which seem to now be kind of left of center now, not even front and center. Kind of like inflation, kind of like recession, kind of like that laundry list that all the guys like to talk about. And then they talked about reading all kinds of names. We saw that happen in April, and then we saw the market kind of back up and reassess. Yeah, and then we saw this magnificent, really bullshit rally. Yeah, okay, sure. Which, by the way, I have to tell you, I was one that wasn't sure it was going to be a V shape. I thought it was going to be a little bit more volatile. A W? Yeah. I really did. But so tell me, give me your thoughts on why it ended up being V shaped and where some investors went wrong. Well, actually, I would just offer one caveat. You said in the past tense how it ended up. No, it hasn't ended. Right. The rally that we are in the midst of right now is going to continue, I think, for a very long time. I think that we, in some ways, have only just begun to see a series of new highs. It will be straight line, But you and I both know markets never are. And it should be by the way, but it's not healthy. And you typically get 8 to 10% corrections every year. You get 3 over the course of the year, and we certainly had the one in March, April. So yeah, come fall, there may be some sort of pullback. If you're looking out towards December, January, next spring, next summer, I think we're going to continue to see new highs for several reasons. We have things going up. We have an economy that is growing. We have people who are employed. I mean, arguably, that's the 3 E's, right? Right. Employment in the economy. To that, we now have an administration in Washington that is business friendly, that has cut the red tape, gotten rid of regulations. We have the forget what you want to call it, but we'll call it the big beautiful deal, just because that's what a certain someone likes to call it. And what it did, I think, most importantly, Kenny, besides giving us certainty, and besides giving us tax cuts, et cetera, I think what it really did was stimulate growth and investment by allowing or incentivizing companies to invest. You go out and you buy equipment, you can deduct the full value of that equipment in year 1. It's a 100% depreciation. And so that is just this huge tailwind to actually go out and buy the stuff that we need to make stuff. So I think that's huge. And then finally, what I would add is that the AI CapEx cycle is so powerful. I mean, think about it. Microsoft and Google are each spending $10 to $12 million per quarter. Yeah, right. It's unbelievable. It's unbelievable. And that, yes, that has a multiplier effect. Right. When companies like that are spending that kind of money, and it percolates through the economy and touches so many other aspects. And so there's just a lot to like. And that's why I sort of, softly corrected you when you suggested that this rally, was something of the past. No, it's something of the past, present, and future. Yeah, no, I agree. I by no means suggest that the rally itself is over. What I mean is the market might be a little bit ahead of itself, like I'm tired. And I wouldn't be surprised. Now, we're coming into that August, September timeframe, which is always a little bit anxious for the market, for whatever reason, but it is. And so just from an investing perspective, maybe you just want to, what you have as investors invested. If you want to put to work, maybe just wait a little bit and see how the market reacts. Look, if the market continues to go higher, you'll participate. Yes, you're invested. You invest wherever it is, right? As long as they haven't taken themselves out of the market, which I would mention. So I can speak to that because most of my clients, whether they're Bullseye Brief and investment letter clients, or whether they're Bullseye Investment Group money management clients, similar approach, Kenny, and I'm so proud of my clients. Nobody panicked. Nobody took money out. Nobody said, "Oh my gosh, do you think it's over?" And for all the reasons we just discussed, it's only just begun. Correct. And so I had a number of clients that actually put money in. So, and what a difference, because the pros on Wall Street were negative and shorting and taking money out. And it's funny because I saw in the convention business, I saw that same thing. Retail investors that maybe 2 or 3 years ago would have gotten very anxious and nervous. In fact, called up and said, "We put more money to work." There's this massive, very swift correction. Yes. In names that are not, there's nothing fundamentally wrong with. Yeah. So 2 comments. You and I have been pros on the screen for a long time. And I think one of the things that I've observed, and you probably would agree with, is that somehow bears always sound smarter than bulls. Right? And so people want to say, "Oh, well, have you thought about this or have you thought about that?" And it's as though the bears, these pessimists, have seen something that we gullible bulls haven't seen. So they must be smarter. And that's not true. No, it's not true. In fact, a lot of times you end up being dead wrong. I mean, Mike Wilson of Morgan Stanley, how many times has he tried calling it top? Jan Hatzius as Goldman Sachs, the economist there, started to play that same game and then reversed course. And I think these guys should just sit it. But it's good for their business, right? Because that's point number 2. As a pro, I used to work for a guy who would walk in and he'd sort of put his arms on the conference table. He'd say, "Okay, how are we going to make money today?" Well, I'm sorry, but there's not a trade to do every day. 100%. That's the other thing that I think people need to understand. It's not a trade to do every day because you know life. Look, If you're a day trader, there's a trading every day. But if you're a long-term investor, there is not a trading every day.
And by the way, if you're a day trader, go back to school and learn to read balance sheets and read everything you get your hands on and become a fundamental investor. Because if you really want to make money over time, and I'm talking about companies that go up 6, 7, 8, 9, 10 times over several years, you're not going to do that as a day trader. You do that as a fundamental analyst. It's a worker. That's how you make money.
Yeah.
And you're also more tax efficient. So you're not giving the government half your profits.
Yeah. So listen, let me ask you a question. Because the theme certainly is AI. Let's just get it on the theme. The theme is AI now. It's going to be AI in the future. It's not going away. Right. I still think we're very much in the infancy stages of AI. And what's I mean, look at what has happened to things like ChatGPT or Grok or anything just in the last year. In the way that they've become even more sophisticated. You know, the way that they're more popular. You can actually talk to it. It's funny. You talk to like you and I have a conversation, right? And in response, now it's not always right. It does have those restrictions. I get it, which is why you need to be on top.
You and I aren't always right.
No, but I'm not having. I mean, we're right most of the time, right? Yes, we are. But so let's talk about how AI is driving the market in terms of semis, energy, utilities, data centers.
Yeah. So there are a couple of ways to think about AI. First way, the obvious way, is just sort of the intellectual aspect. What is it? How does it work? Who's writing the code? Okay, fine. And then there are use cases, and that's, I think, for many of us, the far more tangible and ultimately profitable way to think about it. In other words, you've got this AI program over here. How do we use it? How do we use it to drive sales? Or how do we use it to drive a car, fly an airplane?
Hold that thought for a minute. We're going to take a break. We're going to come right back.
Great.
We bring it back to the markets. Dare I say, become a better investor in the process. Tax your cup. Our full suite of original podcast content. Whether you're a seasoned investor picking up new trends or you're just starting your financial journey, we offer valuable market insights and strategies from some of the most influential minds on Wall Street and insights to help boost your portfolio and your wealth. You're a successful investor. Join us on YahooFinance.com. YahooFinance.
Past their gas with Baker at Dickerson Urgency. Your next 3 year debt to free your debt.
TRX 26 and TX 28. Absolute precision at every draw.
Here.